Angel is brought to you by Audible with an unmatched selection of audiobooks, original audio shows, news, comedy, and more. Get a free audiobook with a 30-day trial at audible.com/angelbook.
Hey everybody, welcome to another episode of Angel, my new podcast where I talk to angel investors, you guessed it, early stage investors here in Silicon Valley. And the angel investing community here is slightly different than angel investing as you may have heard it previously in your life. There are people who are angel investors who invest in movies. They typically lose their money. There are people who are angel investors in local businesses. That also is typically a donation, or maybe they make their money back over some period of time, 5 or 10 years. But here in Silicon Valley, the Bay Area, we have angel investing becoming a profession. It's becoming something that people actually do full-time for a living. Now, it wasn't always like this. There were venture capitalists who did later stage investing, big checks, $3, $4, $5, $6, $7 million and up. And then there were a couple of angel investors who would bounce around town, typically previous founders who had made money, and they would put $50K, $25K, $100K into companies, and there were a very small number of them. But over the last 10 years, thanks to Naval at AngelList and Seed Invest and some of these platforms, and the professionalism that people like Ron Conway brought to the early stage, people sought after those people, studied what they did, and they basically came up with the profession of angel investing, where people invest, say, in 10, 20, 30, 40 companies a year. And they do this full time. That's why I wrote this book, Angel, just to tell my story of investing in 150 companies. And on this podcast, I'm bringing on 10 investors per season. And we're in our second season coming up. Or this might be part of the second season, I'm not sure, or the first season, we'll see. But today on the program, I have an entrepreneur who I met when I was hosting a technology conference called TechCrunch 40 with a partner of mine back in the day, Mike Arrington. We're no longer partners. And Matt was running a company called Xobni, which should have won.
Thank you.
It was one of the top 2 or 3 companies at that event. Mint won. PowerSet was there. They sold for $100 million. And I ran into Matt. He was surfing. I was at the beach with one of my daughters. And he's doing angel investing now. And I think, like myself, we were both entrepreneurs 10 years ago. But welcome to the program, Matt. When did you get into angel investing? When did you make your first angel investment?
So I started my first company about 11 years ago.
Right.
And the first investment was about a year after that. So this thing happens when the equity in your company is worth enough that you become an accredited investor.
Yeah.
More than the cash you have in your bank account. When that happened, I made my first investment.
And that investment was famously in
Dropbox,
which is a company worth $10 billion or more right now, according to private company valuations. When you invested in that seed round, I believe the seed round was $4 million. Am I correct?
3.5 or 4.
Yeah. And so that is roughly
it's like
a 2,000x investment, potentially 1,000, 2,000. You had a little bit of dilution along the way. But this is the Deca unicorn investment that made your career, correct?
Yeah, it's been really good. It's a good one.
Yeah.
And I'm also I'm really close with those guys and the early team and so proud of what Drew's done there. And
incredible.
Just to be able to go along for the ride like this has been amazing. I hope I've been helpful. And I'm very excited about going to New York for the IPO party.
Yes.
Yeah.
They haven't filed yet.
Nope.
And but they might have, who knows, they can do the quiet filing now, but at some point they're going to. And I hear this a lot from people who've hit these decacorns or, $10 billion plus outcomes. It's so beyond what you could ever conceive of when you made the investment that in a way it's humbling. You feel like, and I get that sense from you, that you hope in a way you've been helpful to the company because in a way, they don't need you after a certain point as an angel investor, right? They've hit escape velocity. And what we can contribute, myself with Uber, yourself with Dropbox, it's almost humbling that there's no help we can give them, but yet you stay friends with Drew, I stay friends with Travis and Garrett, and you're just part of this amazing outcome. It's speak to that a bit.
Well, I think where I was most helpful was actually in the beginning stages. So the story with that company is my co-founder and I dropped out of grad school, I moved into his dorm room at MIT for like a week or two until we found an apartment. And during that time, I met Drew, who was one of his fraternity brothers. And as soon as we got an office, or not an office, an apartment, which was our office, we started working out of there, and Drew was hanging out with us a lot. And he's like, this is way better than working by myself. Can I come like rent a desk and work here with you guys? And we had the room. So it was really the three of us. We were working on Xobni. He was working on a SAT prep company. And, I kind of learned this guy's pretty smart and really smart and good at what he does. And Adam thinks he's one of the best developers he's ever met. And so we actually tried to recruit him to our company.
Why weren't you able to recruit him?
He wanted more equity than we were willing to give.
You were going to give him 5 points, you wanted 10?
4 and 8, actually.
Yeah, it sounds like a founding conundrum as a team member.
Exactly.
Now, if you had done that, do you think Xobni would have been a bigger outcome?
No, and I think it would have been worse for all of us. So I think it was great for all of us that it worked out the way it did.
Yeah.
Yeah. I mean, maybe.
Who knows?
Who knows? But so much about picking the right market. And Drew had a hunch on this market that was ahead of its time, clearly. And that's when you get these crazy, crazy multiples.
Unpack that for a second. When people are ahead of the market, what market was Drew ahead of? What did he see that you didn't see, or I didn't see, or the market didn't see?
So, he's a hardcore technologist, as was Adam. These are guys, I met Adam actually on Craigslist. We were both interning in DC. And so I was like, yeah, hey, come rent this apartment with me. He moves in and I'm helping him move out of the car, and he's bringing 4 servers and like 5 B&Q monitors. And I'm like, what is going on? And I was in my PhD for electrical engineering. Like, I'm a technologist myself, but I'd never seen somebody this crazy.
Yeah.
So people like him and Drew, they were already moving files around using their own private servers, and like they knew how to do that. Most people were using USB sticks.
Yeah.
Right. And frankly, I'm sure
Usend or Send Now, whatever it was. There were some services for sending large attachments that never worked.
Well, not only that, but it's like anytime it changed, good luck. You have to go send it again.
Yep. And
Drew's like, no. This should just files should move between all of my devices. And one of the things that he really hit, and a lot of us hit in our businesses, was the growth of the iPhone and the smartphone that said, oh, now I have 2 devices that I need information on. So we kind of all rode that wave, but he was early to notice it.
And cloud computing, I suppose, because at the time, people don't remember 11 years ago, the idea that you would use or share a server, that was kind of a mind-blowing idea. I remember when people first looked at something like Dropbox, they were just, I don't know if I can trust putting my files in another location. It turns out, of course, putting them on somebody else's server who's dedicated to security is safer than running your own server, because they're patching it and they're on top of it and they're monitoring it, right?
Well, and I mean, I think the first launched version of Dropbox that the public would have used was built on AWS.
So yeah, they were one of the first people to use AWS, in fact.
So that technology also gave them this kind of groundwork to allow them to go and build this business much faster than they would have 10 years previously.
So I'm curious, how did you decide you wanted to do angel investing? Because I know I talked to a lot of founders who are like, angel investing is different. I'm a founder. I certainly thought this way for a long time. And I would just help my founder friends. And I missed Zynga, early access to Tesla, and in fact, Twitter, because I was just like, I don't angel invest. I run my own companies.
Right.
What did you see that you realized I should just be an angel investor? Because most people don't get that they can do both.
Yeah. Well, there's a couple things in play personally for me. So, I've always been an entrepreneur, but alongside of that, I think at the age of 12, I started first trading stocks in public companies.
Oh, wow.
So I started investing in companies very early. I saw a bank account making 0.05% and, stocks, potentially having dividends and capital gains. And so I started playing the stock market early. And then I was in college through kind of the .com boom. So I was buying pink slips, like over the counters, like getting into these stocks early, hearing from friends at Stanford about this Google thing and these other things that are happening. So I was always investing alongside of being an entrepreneur, so it was kind of natural for me.
What did your parents do? Your parents do something that inclined you to do that? Or were you just like one of these Michael J. Fox kids who started reading the Wall Street Journal like on Family Ties or whatever?
Well, my parents, my mom is the business person, my father's the technologist. So I'm kind of the combination of those two people.
Got it.
My mom taught me sales.
Really?
I was selling programs at Penn State football games, come up with strategies to drive bigger sales.
What did mom do? I'm curious.
A lot of multi-level marketing.
Wow.
Yep. Hair, makeup,
That is true sales.
Supplements.
Like that's true hustle because all they do is get commission, right? And you're just
she's one of the best salespeople I have ever met. And I've learned so much what I know from her.
What did she believe good sales was? Like, did she ever say to you, like, sales is about this?
Well, this actually gets down to the other thing that I think helps me in angel investing is that my mom will meet somebody in the elevator, and by the time they're on the 5th floor, she knows how many kids they have, what they care about and what their passions are. And that's something that I share with her is I'm just genuinely interested in people and in a lot of things, so I can identify with people on a lot of things. I learned that from her, and I think it really helps in what I'm doing in angel investing. And frankly, it's the thing that I feel like I've been best at in building companies too, which is identifying great people. So it's the same thing it takes to go and find a co-founder, bring in your first engineers. It's the same type of profile a lot of times as the person that can go and start a company. So we tried hiring Drew. We couldn't, invested in him. If you go look at my first company, the first 2 employees went on to start, the first employee went on to start a company that sold to Twitter for about $50 million. That was Gabor Cele. And then employee number 2 and 4 went on to start Dropcam.
Wow.
Right. So
did you invest in Dropcam?
I didn't because I was mad that they left the company.
Oh, wow. So your ego got in the way of the investment.
That's happened. That was the most critical time that happened.
That was a $500 million outcome, right?
Yeah,
to Google.
Yes. And I would have
They sold way too early.
They did.
In retrospect.
They did. But I'm happy they're out of the market because now I'm an investor in Ring, and Ring's kicking.
Yes, Jamie Siminoff. Yes. I passed on that.
As did a lot of people.
And it wasn't out of any lack of faith in Jamie. It was, I had seen Jamie do like 3 companies. Mm-hmm. He did Phone Tag, which was amazing. He did Unsubscribe.
Yep, I was an investor. Yep.
And I was like, I don't know. I think Jamie just seems like a great entrepreneur, but he does these like very niche. He's just kind of like a dabbler. Mm-hmm. I don't know if he's ever going to build like a huge business. I think he's going to build these, and he had kind of said that to me. He likes to build these like $10 million businesses. Mm-hmm. So I was like, well, that kind of is the opposite of angel investing. You want to have the $10 billion outcome.
Right.
But of course he does Ring, and he doesn't tell me, by the way, I've changed my mind. Because when he was pitching me Ring, he was pitching me 3 other devices concurrently.
What were the other ones?
The other device... Now everybody knows Ring is the internet doorbell. It's incredible. It's obviously going to IPO and make tons of money. I understand they're doing like 9 figures or something crazy.
They sold 150,000 rings on QVC on Black Friday.
I saw that on Facebook, his post. He sold 150,000 rings. They cost $100 each, $200.
150.
Yeah, so this is like
$20 million day.
$20 million day on Black Friday. Unbelievable.
Yeah.
And everybody loves that product. I used it. It's an incredible product. My friend Sky Dayton's an investor too, I think. But the other product was, he was pitching me the other product, and Ring was like, he had some other name for it. Doorbot. The other thing he was building was a box that you plugged your cables into at a party, and everybody could charge their phone. So his idea was at a club, like literally at a dance club where you're having bottle service, there would be a brick on the table with cables coming out of it. Doblet.
Company's doing it, yeah.
Yeah. And I was like, batteries. Like, this is not inspired. Like, so he was so all over the place that I just missed it. And, that's kind of my number one rule. Like you, I think we're very similar in this, which as you said earlier, you like to bet on people. So I should have just bet on Jamie, because if you bet on Jamie on 3 or 4 companies, you would have lost money, broke even, lost money, and then had a home run. So what does it matter over the arc of it?
Absolutely.
What do you look for in people? Like, is it just your gut, or are there qualities that now, after how many investments have you done?
65.
After 65 investments, are there just questions you can ask or reactions you can sense that let you know absolutely or absolutely not?
Mm-hmm. Well, if you look at somebody like Jamie, he's one of my closest friends. We learned to kite surf together. I, go to Nantucket with him every year. I know his family very well. So I know him at a deep personal level. And the characteristics that he has is like, if we're at the Nantucket house, he's like working on project of the house. And it's not because he can't afford to have somebody else do it. It's because he likes going and tinkering and building stuff himself. He's always taking things apart, buying a new vehicle, modifying it, changing how, even the back patio at his house is designed. So he's just always hacking on things. He's a doer. He's a builder. Yeah. And then he's incredibly gracious, generous, an incredible talker, and it makes everybody laugh. And so it's kind of like the tinkerer plus sales guy. It's a pretty good characteristic. But not everybody fits that same profile.
No. That's one archetype.
That's one archetype. The archetypes that scare me, I talked to one today.
We will obscure what day today is.
Right.
We will not say what day it is.
Yeah. But
so that founder doesn't feel bad.
But big company experience, not having created many things on their own. Entrepreneurs will build things even if it's not about making money. They're going to build it because it scratches an itch, as people say. Like right now at my house, I'm hacking on tons of LED light stuff. I think it's amazing what's happening with home lighting and what you can do. And
what's amazing about it?
Well,
I'm curious.
The form factor changed. Right. So then you can put lights into new areas.
Like those little ribbons and stuff like that?
Also, the voltage and wattage has gone down so much that you can be more comfortable using more in certain locations. Certain types of devices that could support the load previously can now support the load. I did 3 of 4 years in PhD in electrical engineering, so I'm like a little bit further than most on this, but like even for the average person, there's so much cool stuff that you can do with this lighting now. I have a Hue hub running. I have a Insteon hub running. I have a Lutron hub running.
God, it's so many different things. My phone, the collection of apps I have, I got Dropcam, Butterfly, Ring, Kivo. I got everything. Yeah. It's getting a little crazy. It does need to Nest. You got to consolidate into something.
It's not for everybody, but I just like hacking on it and playing with it. And
okay, so the one you don't like is the person who doesn't actually like to build anything. They're just a corporate suit kind of.
Yeah, and they talk and like, oh, we're going to do that once we have money. Like this is sure you hear this all the time, angel investing. Like, oh yeah, we just need to raise this so we can get our prototype out or our beta or alpha. And I like companies that we're building our alpha. Here's the results already. Give us money so we can accelerate or so we can hire this next person. So I like people that, they're just relentlessly resourceful, to use a Paul Grahamism. Yeah. And, are really passionate about what they're doing. And people that when I talk to them, I see clarity. Clarity in communication is so important for founders because you're telling your story so many times. You're selling to employees. You're selling to vendors who normally wouldn't give an office lease to somebody like you. You're selling to investors, to partners, and the clarity of your message is so important. So I really look for good communicators.
Yeah, sometimes people can't even explain what they're working on. It's incredibly frustrating when you're like, "How do you make money?" And so many times I have people list every known monetization strategy. They're like, we're going to charge for our software. We're going to be ad-based. We're going to sell our data. And then we're going to have subscriptions. And we're going to do consulting. And I'm just like, I think you just mentioned every possible way humans have ever made money in the history of humanity. Yeah. But let's talk about doers versus talkers. Is there ever an instance where somebody could not be a builder and you would want to invest? Like these people who say, and I groaned because I get it a lot too, which is, if you give me money, I will spend your money. But if you don't give me money, I'm not going to build anything. I'm going to sit here paralyzed. Mm-hmm. Is there ever an instance where somebody's not a builder and you would want to invest?
I'm trying to think. I don't, it's just not the archetype of people that I hang out with and it's not, I'm more of the builder and the doer. And so I feel like I'm more comfortable understanding the powers of people that are more like me and the people that I've spent time with. So there might be some businesses that are, there's, private equity. What happens in private equity, I think, is incredibly interesting with large dollar values. And, they're piecing together what other people have built, people identifying what other people have built, and changing how it's sold or how it's paired up with other things or how it's consolidated. That's compelling. It's just not a business that I understand, that I've built, and so I can't even evaluate those people very well.
It also seems soulless to me. I think when I hear you talk, it's very similar to my approach, which is I'm looking for that soul in the business, that you're going to build this no matter what happens, whether it makes money or not. You have this itch. You want to build something, and you want to see it manifested in the world. You're Jamie Siminoff, and you just want the doorbell. You want to see who's at the door. You're going to build it for yourself, for your cousin, for your mom.
For him, it's about neighborhood safety.
Right, which is now he's found this higher mission, which that's one of the great things about building, isn't it? Like, that wasn't his original idea. That was just something that manifested itself from all the action he took.
Yeah.
Talk a little bit about that. When did he figure that part out?
I don't know when I think it was pretty early, frankly. Yeah. He's, if your house can feel like it's always home, that you're always home, then you feel more secure about knowing what's going on around that place. I know there's many instances. He's married, has a 8-year-old boy. Yep. He feels better that his wife can know they're in the backyard, somebody's at the front door, and if it's somebody that looks, like they should be worried about it or not. I think he can actually go and see her open the door, even if he's at the office, right? Even though she actually works just as hard as he does. She's incredibly successful herself. Yeah. But yes, that mission has been there early. But I think for a lot of founders, and I can say this for myself as well, part of the mission was to build the business and the product. With our first company, it was like, email sucks. There's, people aren't in your email. We're going to go make your email about people, and it will help you kind of extract the relationships in there and be more productive in your job. But also for me, Xobni and Sincerely was about building a company I wanted to work at. I did internships at places like the Naval Research Lab and NASA, and I had job offers from like Lockheed Martin, Accenture, and I went to those places and it was like gray cubicles, people who were like looking at the clock, waiting for 5 o'clock.
Soul crushing.
To me, that's soul crushing. And I wanted to work somewhere where people didn't look at the clock, were there because they really wanted to be there, and maybe even sacrificed, some economic upside to go and be around a bunch of people that were doing the best work of their lives. And for a lot of entrepreneurs, I think that can be just as much about the mission, and then the product and the business. If you have great, smart people working around a problem space that's important, I think given enough time, you're going to tease out those businesses. All
right, let me get some blocking and tackling questions in here about angel investing. I get the idea, and I think the audience does now, of what you look for, and it's very confirming, which is great. But how do you value these companies at an early stage, and how does valuation, if at all, play into you making a decision? If a founder comes out of YC and they say, I want an uncapped node, which was kind of like, 2 years ago, the trend. Now it seems to have come back down to earth. Do you even think $4 million for Dropbox I paid 11 years ago, and now these people want $15 million and they're not Drew? Does it irk you, or do you even think about the valuation, or just think, I love this company, I got to be involved, I'm going to let the valuation fall wherever it lands? How does it work?
Yeah.
Today.
So I don't do uncapped notes. Never have.
Why?
Because I don't know what I'm buying.
Right.
I've been an investor for a long time. I want to know what I'm buying. A lot of these companies, when they're early stage, and I've met somebody who's maybe this is their first company and they're incredible, I look at it as like an investment in their career. And I think, paying $3, $4, $5, $6 million for an incredible founder, especially if there's two founders, one of whom's technical, and I'm paying to just go get an option on their career for $5 million, that is a deal.
That's a fascinating way to look at it. So you're saying these people are impressive. They're going to be great in their lives. It's pretty much are good at reading people, so they're going to have a great career.
Yep.
And if I invest at $5 million, that's a good price. And hey, it gives me the ability to invest in their next 2 or 3 companies as well, because I will have been an early supporter.
Yes, and that's happened. I mean, Jamie, I invested in Unsubscribe. I think I got my money back.
Yeah.
And then I invested.
It's kind of like getting a single by getting hit by the ball, right? Like you get on base, but it was kind of ugly. Like he just kind of got out. He saved it, but
yeah. The other thing that happened, you're well aware of this. The other thing that happens with these incredibly talented people is they're worth so much, and they're not proven yet because they haven't worked at the big company or whatever. So they go and they build a company for a while, and then they're incredibly marketable as a small powerhouse team to a Google or a Facebook or whatever. And so in that case, you're getting often a piece of, like, if the company fails, of their signing bonus.
Right.
Which is a weird thing that happens here, but
the acqui-hire,
but it, and this is not where you make your big money.
No.
But it is a great way to not lose money and to build those, back those early people, build those relationships.
How do you deal with losing? Because at the stage that you and I invest, which is the earliest rounds when they're just got their product to market. Maybe they got a prototype MVP, minimum viable product. A lot of your investments are going to fail. Out of the 65, I'm assuming more than half will fail, 2/3 will fail, return zero. How do you deal with that influx of losing?
Well, there's a little aside here.
Yeah.
I like tax. I like thinking about taxes. And so a lot of times losses, I'm kind of like, oh, that's like a great capital loss that I can write down. And so I actually, some of them they really don't bother me actually, because it's like, oh, I can write those off against gains. I just hope that they line up during a calendar year.
Right.
But how do I think about those losses?
Does it get to you just when, for like, and this must have happened to you, you have 1 month of news from your portfolio, and the news is, like I had in the last couple of weeks, 4 companies say, hey, we're packing it in, we're selling for 15 cents on the dollar, 0 cents on the dollar, 25 cents on the dollar.
Yeah.
And my wife was just like, oh my God, 4 in a week or 2? My God, how do you deal with it?
Yeah.
And I was like, look forward to hearing what their next idea are.
Yeah.
But it took me a little while to be magnanimous in this loss. I'm just curious if it affects you, the bad news piling up or people running out of money constantly.
What I would say, the hardest thing about this is usually the companies that are struggling. One of the biggest things I bring to a company is my advice and time. I'm available by phone call and SMS almost any time of the day, any day of the week. And often it's those companies that are getting shut down or failing and struggling to raise money that actually consume a lot of time. And that's the only downside, is that you have to kind of like make sure to be helpful because you love these people, but not spend all of your time on that, because it's kind of like the employee that's not working, and you spend all your time trying to manage them to be a higher performer, where instead, if you just spent that time on your highest performers, your business would be doing better. Right. So it's the same type of thing. I'd say that's the hardest part about the losses.
Yeah. So the losses take up the time. Drew's not calling saying, oh my God, we need help with Dropbox. My God, we're struggling. But there's been
those times, but
there have been times, I'm sure. Yeah. I'm sure with Uber, there were times Travis and I had critical discussions about surge pricing or other things in the early days that were important discussions to have.
Yeah.
But now it's like, like they're not calling, but the people who are calling, it's like, oh my God, I really have to walk this founder. Yeah. I tell people it's like hospice care sometimes. Like sometimes I feel like I'm running a hospice because the whole day is for people their companies are slowly dying.
Yep.
And they have to accept the death of the company.
And if you're an involved enough angel and advisor, I think you can often tell them, if you're close enough with them, that the company's going to die before they know it, before they will admit it.
For sure.
And this is some of the, I've sold businesses at the right time because good friends that were investors and just good friends lifted my head up from working my ass off.
Yeah.
To realize that, hey, now's the time to sell. And so I just did that with another one of my companies, 3 months before he realized it was the right thing to do. And we put some things in motion that looked like if they're going to move to an outcome where people are going to make some money.
Right.
And
it's annoying quality founders have sometimes. They run the gas tank to zero and then they call their angels and say like, we're out of money. It's like, could we have talked about this 3 months ago?
This is why I like monthly updates.
Oh, you and I.
And companies that aren't sending them or stop sending them, that's always the signal.
That they're dying.
Or
1 out of 100 times it's Dropbox or Uber. They're doing so well that they don't feel the need to.
That's true.
So they take a year off of updates.
That's true.
It is the exception.
Yeah. But then the other thing is, whether it's me or somebody else, and I always ask founders about this, do you have somebody that's a former entrepreneur that's very close to you that you trust, that is going to keep a pulse on this business and is going to look out for hurdles ahead of you before you see them? Because when your head's down working on these businesses, you're thinking about like, how do I move that cost of my acquisition from $7 to $6? And really the thing you should be thinking about is like, oh my gosh, this market's changing and it's like about to get swept out from underneath my feet.
Yeah. Sometimes it's like you're a fighter pilot and like you should be looking at the sky in front of you, but you're looking down at the speed or, you're tweaking something on the control board and you're not looking up at the big picture and realizing there's a storm ahead of you. You might be flying into a storm. All right.
Yeah.
Another blocking and tackling question. Total addressable market. This is a big thing. You go to an average demo day, whether it's YCs or others, it seems everybody is obsessed with the TAM, total addressable market. And you hear people screaming it at the top of their lungs. This is a $15 trillion total addressable market. Do you even care about that? Does that even come into your thinking that you're going to do some analysis of the market at this early stage?
I actually do some analysis of it. The things that I look at, I want to be more, I hear about so many businesses and so many industries. I'm an investor in a de-icing technology company.
A de-icing, like on planes.
Like on planes, instead of using chemicals that take 45 minutes and make executives late to their meetings.
And smell.
And are bad for the environment, to have integrated technology into the wing that can actually do this instead. Interesting MIT lab company. I had no idea about the de-icing market and how many dollars are spent on that. And that was important for me to understand, to just think oh yeah, somebody NetJets could pay this company, $20-30 million a year. It is a very big cost. It's multi-billion dollars, this industry. So I do look at that just so I'm educated about the market I'm investing in. And then the other thing I look at is what other big businesses are in the space. So who has made money in this space? What's their kind of average contract value? What part of the market are they selling to? And then the magic stuff, the place where we all win, is whenever you identify something that's small, that's going to be big. Right. So that's the market. That's there's something changing. There's a fevered pitch beginning, but it's a small part of the market, but it's going to represent the future.
It's when the market actually doesn't exist. There's not a comparable. So when you look at something like Airbnb, on the margins, they're competing with hotels, but in many ways, they're bigger than the hotel business because they've induced people to travel more.
Right. But so, in that case, HomeAway were they already public?
HomeAway, VRBO, and HomeAway. I think VRBO existed.
Yeah.
Vacation rental by owner.
Yeah.
Which was for homes, not rooms, generally.
Right. Bad user experience, et cetera.
It was like a legacy Web 1.0 business that some of us used to rent homes instead of for families, but it wasn't for travelers, or certainly not business travelers, or people who were going to hostels or staying on friends' couches.
Yeah.
I think ride sharing in a way also, because you see ride sharing now is bigger in a lot of markets than the taxi business.
Yes.
So that means that an analysis of Uber and Lyft and Sidecar and some of those early players could never have been accurate because the market had not yet manifested itself with people going full Uber and no longer owning a car.
I don't think it's about actually saying the market's 1 billion or 10 billion or 100 billion. It's just understanding that it's big. Moving people around in a city is a big deal.
Yeah.
And there's maybe different ways to approach that. And if a company has a good idea around that, and there's really smart founders going after it, that's a cool pool to be playing in.
Yeah. I think that was very interesting. At some point I read somebody analyzed the ride-sharing market, and they were including miles traveled on public transportation, as well as Hertz Rent-A-Car and those kind of services. And I was like, oh, wow, I didn't consider those companies. And they were just looking at miles moved by humans.
Yep.
Independent of a bus, a Hertz, a carpool, whatever, livery cab, gypsy cab, dollar cab, whatever.
And we're getting a new wave of transportation companies. This is something I'm personally very passionate about. I'm working a lot on trying to transform our cities towards more active transport.
Yeah.
What
does that mean, active transport?
Walking, biking,
boost boards.
Boosted boards.
Are you in boost boards?
I'm not.
That was a company I looked at. I had them on the program. I was like, I'm fascinated by boost boards because I see adults zipping around at 15 miles per hour on skateboards.
I think they're a little bit dangerous and hard to use for the average person.
Yes.
What I'm more excited about is hubless bike share. I'm an investor in Spin.
Hubless bike share. Explain what that is.
Hubless bike share is a bike that locks to itself. You unlock with an app, and they're dispersed all across the city. So this is...
So lock them to a lamppost or whatever.
You don't lock... They lock to themselves. I used it first in China. I used OFO and Mobike there.
Oh, right. You can just... You put it out anywhere, lean it up against the wall, basically.
Yeah, sidewalk, etc. Hopefully now cities are adapting and turning over car storage spots to be bike storage spots. And this market is huge. And again, people need to get around their city. There's a whole bunch of people that couldn't use a bike because they didn't have a place to store it at their home. They're worried about it getting stolen. They didn't have a place to store it at their office. And now with bike share and hubless bike share, which is growing incredibly fast, it's a whole new thing that's opened up.
Which one are you in? Which one?
I'm in Spin.
Spin.
It's a U.S. market, a couple former Uber and Lyft people that are doing it. And
Are they electric bicycles or just regular?
these ones are electric.
They're electric.
Sorry, they're regular.
They're regular.
But there are electric ones as well. There's a company called Jump that's doing electric bike share, which I think is huge as well. Again, opens up the market to now people that were lived up a hill or worked up a hill.
I mean, that was one of the problems. If you lived in a place like San Francisco and you were in Pac Heights or Kahala, whatever, it was a non-starter. You're going to be sweating and you're going to be exhausted to get home, or it's just too hard.
Absolutely. So that opens up to them. Now, there's another company in LA I'm trying to meet, maybe go down there this week, that's doing
All right, let's go.
a new type of scooter.
Ooh.
It's a scooter share.
Like Scoot. We have Scoot networks here in San Francisco.
Scoots, yeah. These are like
They launched at Launch Festival.
These are like Razor scooters that are electric. So they're small, no license required, very safe. And
12 miles an hour type thing, 10 miles an hour.
Exactly. And I think that's a whole, again, addressable market. People need to get around cities. More people are living in cities around the world.
But when you look at this is something that only a small number of people participate in now. So you have to, as an investor, imagine a world where there's mass adoption or much more adoption, correct?
Oh, for sure.
How do you do that? You just take a leap of faith, or?
I mean, a lot of it has to do with cost, right? Like once these things become really cheap, people use them more. One of the reasons people are using more Ubers than taxis is because they're a lot cheaper.
Yes.
They're more convenient and they're more cheap. Same thing with these types of technologies. What enabled them? It's the fact that the batteries have gotten really cheap. And now,
so Teslas and cell phones are driving the price of electric scooters
absolutely.
and whatnot
China's
down.
supply chain and the fact that these Chinese companies have brought so much capital in the market on bike share, the cost of producing a bicycle has gone down dramatically. Just, like we've produced more bicycles now in the last...
I just noticed it from when I was at Burning Man that everybody's making their own electric bicycles. So there's this battery pack that you can add to any bicycle. And instead of buying the $2,000 e-bike that has it integrated, people buy like a $150 Walmart bike. And they have this like $250 gigantic battery that you can slide in and out. And they hack together a $500 bike that after 2 or 3 Burning Mans is destroyed, but you're basically paying whatever it winds up being, $20 a day to have an electric bike at Burning Man that can zip around.
Yeah. You don't need an electric bike at Burning Man, but it's flat.
You know what? I have to say, if it's 5 a.m. and you're coming back from Robot Heart and it's cold, that can come in handy, that electric bike.
My friends run Robot Heart, so I always have a place to crash.
You do. See, that's the thing. I'm transient at Robot Heart.
All right.
I was on the top of Robot Heart, and I met the guy who runs it, these French guys, right?
Yeah, there's a couple people
Anyway,
involved
the French guy's being very kind to me. I was with somebody who's notable, and we're hanging out, and he's like, oh, come up onto the top of the thing. So we go on the top of the thing. He's like, oh, you can climb on the heart. And they looked at it, and I was like...
Usually let beautiful women do that.
Yeah, exactly. Well, anyway, I was
included.
I think my sarong may have put me in that category.
Okay.
This sarong was so right. And let me just tell you that. I mean, and so I said to the guy, I said, you could climb on that heart. I am not climbing on that. I mean, I was like right next to the heart, but I was like, I'm not climbing on that because that looks like it's about 40 feet up. And there were some people in it, and I was like, that seems I know safety third is the motto at Burning Man, but that just felt dangerous. You been in that heart?
I've been next to it. I have not been in it.
See, I think that's the right judgment call.
Yeah.
I think it's the right. You didn't have a sarong.
Yeah.
I'll loan you one. I have extra.
All right.
All right. When we get back from this quick break, we're going to do a quick portfolio review.
Okay.
I'm going to run through some of your companies. You tell me what you love about them. And I see right here, 15.5, you're an advisor to. It's a company I love when we get back on Angel, the podcast. Yes, Audible. How I love you, Audible. I am addicted to audiobooks, and Audible is my go-to for the latest and greatest. And what I do now is I pre-order books. This is my little secret. It's a delightful little secret. I'll be listening to an audiobook, and then, bink, I get a little surprise in my Audible because I pre-order. What did I pre-order? Andy Weir, who was on this very program for The Martian. His new book, Artemis, came out, and I was there doing my little walk. I'm going for a walk, and I was listening to another audiobook, and I saw it, and I said, oh, pause, and then I started Artemis, and I started listening to it. Oh, my God, it's great. I don't want to give anything away. I just started it, but that is going to be my Audible pick for this week. Go to audible.com/angelbook, audible.com/angelbook to get Artemis. Yes, the new book from Andy Weir, who was on this program, friend of the program, who did The Martian, which became a major feature film with Matt Damon. Also, I think that was nominated for some Academy Awards and stuff like that. But anyway, you know all about Audible. I do not have to repeat it to you. But when you listen to these audiobooks, my God, what a joyful experience. One of the things you can do, you miss something and you say, wait a second, did I really grok that? And you can just hit the rewind, 30 seconds, and listen to that minute again. Even if it's some very poetic in a piece of fiction or something very complex in a piece of nonfiction, I always like to hit that rewind key. I use it liberally. And now they have a car driving mode, which makes a beautiful, I could show it to you here, but you hold on my phone, but it's a beautiful big interface for when you're driving so you can be safe. This is one of the delightful things about the team at Audible. They're always adding new features. Of course, you know about the sleep timer. Of course, you know about chapters. Of course, you know about clipping and changing the speed from 1 to 1.25 to 1.5. And, you have to, in my mind, you have to listen to one chapter of the person's voice at 1.0, and then you know if you should go up 1.25 for somebody who is a fast talker, or 1.5 if they're an incredibly slow talker. So I also use WhisperSync. This is an amazing thing. I'm listening to a new book, some fiction. I don't want to mention the name of it right now because it's not a recommendation. But anyway, I wanted to try reading it while listening to it. And I did that with the WhisperSync, and man, does it really increase retention. So if you've got a challenging book and you really want to have that knowledge sink in, and you're not driving or walking, I was sitting by the fire. I put some of that almond wood on the fire, and I sat there in my fireplace. I had the day off. My family was out doing some stuff, and I had a nice 6-hour window, and I sat there reading and listening at the same time by the fire. It was delightful. So go ahead and get your 30-day free trial membership and download my book of the week by going to audible.com/angelbook. Audible.com/angelbook. Please go and do this and show your support for Audible, because they support independent media like this, and they've been one of my longest running supporters, and it really means a lot to me to have such a great brand with such a great product in my life and supporting everything I do. Thank you so much to the team at Audible for making a great product. All right, let's get back to this amazing episode. Hey everybody, welcome back to Angel, the podcast. You can go find us at angelthepodcast.com, or if you want to use Overcast, I've been using that and I paid for the premium subscription. Man, that's a great podcasting app. Also Spotify, excellent. The classic iTunes, all of those places where you get great podcasts, come and subscribe. And if you really want to do me a favor, and I mean this sincerely, write a review, because it really does matter. And I read every one of them. And I have to say, the reading of the 281 5-star reviews of Angel the Book, angelthebook.com, when I read those reviews, it makes me want to write the follow-up book. And this past week, I started writing a follow-up book. I literally wrote 4,000 words over the holiday. I think I'm going to have the next book out within a year of the past book.
Cool.
I loved writing the book about angel investing. And it's just great to look back. You're 60 plus investments in. Mm-hmm. It's great to look back. Do you take any time to look back on your portfolio, or do you try to just keep moving forward? Have you taken a moment to reflect on this massive success?
I go through periods of that, whether it's maybe looking at bringing in a new source of capital behind me. So I'm doing kind of a review. And when I do that, I get pretty excited whenever I kind of, drop down the Excel spreadsheet and look at the multiples on exits and, unrealized returns. And I'm like, fingers crossed, but I've been pretty good at this. It feels good.
I think you'll wind up being one of the greats if you keep going.
That's nice of you to say. Who knows? But I'm going to keep doing it. I like it.
It's one of the things that I think people don't realize is if you play in this casino that we play in, Silicon Valley, and you invest in a certain type of company, i.e. companies with founders that are extremely talented who have gotten their product to market, you've now eliminated two massive negative signals. People not in the Bay Area. Mm-hmm. Now, that's not to say smart people are not from other places. A great founder can come from anywhere. But if you're here, you're very serious about it. You've elected to live in a very hard place, a very expensive place, a very competitive place, and a place where there's massive sources of funding to keep you going. And then second, if you only invest in people who can get their product finished, you've eliminated all the talkers and the bullshitters. So now you're investing. I tell people it's like playing the lottery if they gave you the first 5 of 8 numbers. Mm-hmm. It feels almost like we are, because we're so inside on this, that we are starting with such a massive unfair competitive advantage. Do you feel that way sometimes, that we have a massive competitive advantage being here with our networks at this moment in time?
Very much. I feel, and especially, I moved here 11 years ago and it was much smaller. So I got to meet these people that it would maybe be harder now. I also just feel very lucky that I've had financial success, that I can go and have a family home in the city so that I'm a 10-minute bike ride from any meeting I ever need to get to.
Right.
Which is an incredible competitive advantage.
It's important to be here.
It is very important to be here. I do worry about our costs because I really don't want it to just be people that can afford the most expensive places. So I really do advocate for us to build more housing. So
oh my God, YIMBY.
Yes, we need to.
But in a way, having moved here, and I moved here 3 years ago, I was for the last 10 years commuting from LA. There are so many places within, let's call it an hour drive, that I almost feel like people are not very creative in their thinking. Like, you could start a company in Pacifica. You could start a company out in, I don't know, Walnut Creek. And you could take the BART in and make any meeting within 45 minutes.
Yeah.
Why are people so focused on living only in San Francisco? Like, when I lived in New York City, we had this hustler approach that anywhere on the New York City transit system was fair game. So if you lived out in Flatbush, East Flatbush, or the Rockaways, you were in the city. You could get to the city. You could get to a club. You could get to the Limelight, in a taxi for $20. Good.
Yeah.
It seems people are not very creative here.
I think part of it is a growing desire for a more kind of walkable human habitat. Right. And frankly, once you leave the core of San Francisco, it dissolves to car first life.
That's true.
And so I think there are a lot of people that move here, especially from other countries, like they come from Europe or even China, and they're like, I don't have a driver's license,
right? And
I don't want to spend 40 minutes in a car getting places. And frankly, our public transportation is nowhere near what New York has.
It's a disaster.
It's a disaster. The other thing is, I don't think it's as much about being at the clubs, but it is about those spontaneous interactions where you run into somebody at the coffee shop, you run into somebody at the party, and to be able to hit all of those things and just intersect with people randomly, it makes you more authentic and part of the community than if you were just, driving in from, I don't know, pick a place.
Yeah.
So
you think Oakland's going to tip where like we could see people HQ there?
Oakland
feels so close.
Oakland is pretty tipped already. There's really good people living there. I mean, and it is a good urban environment. We need to do a lot of work to make it better. It's got highways plowed through it from the 60s.
So weird.
We had them here too. That just the earthquakes didn't take theirs down.
Right.
So we need to.
Yeah, they took the Embarcadero. People forget was an elevated highway.
Central Freeway. Yeah. And it made our city much worse. So
we had it in Manhattan too. The West Side Highway was an elevated highway and we knocked it down and we made this beautiful park. The West Side Highway is now gorgeous in Manhattan.
Do you like Washington Square Park? Because Robert Moses tried to put a highway through there and ruin that park. So. Oakland is divided on some of those factors, and that hurt. Their fabric's not as good as San Francisco's, but their proximity and the fact that it is more of a good urban environment than, say, Pacifica, I think it has a ton of potential. Yeah, I know a lot of good people living.
I just love that ferry commute. I think that the ferry commute is so underrated that we should just go full ferry around the Bay Area. Like, you could go down past the airport, East Palo Alto. If we popped a ferry, I don't know if you could through the sludge there or whatever, but
there's talk of this. I spent some time with Bay Area developers. There is a regulated limit on ferry crossings and amount of ferries, so it's kind of like the taxi industry right now, where it's like only a few companies have permits and.
Bullshit. Let's crack this.
I know.
This would be the big open. We got to find a company. Okay, if there's a founder watching, this is a request for startup.
Okay.
Matt and I are a request for startup. And by the way, you can follow Matt on Twitter, Brezina, Brezina, Matt Brezina, and he's Brezina on Twitter. Request for startup. Some Uber X Lyft line of the Bay. Mm-hmm. Literally the Bay, the water.
Yeah.
God, it'd be incredible.
Yeah.
Because I thought about this. I was talking to some people who live up in Tiburon.
Yeah.
And some of them have docks. And I was like, wait a second. When I was down in the British Virgin Islands, they had these like boats with 4 engines on the back, and they could zip, zip, zip. And I was like, wait a second.
I have a friend that does it.
This sounds like it could take 10 minutes to get from Tiburon to
South Beach. Yeah.
South Beach. Is that what it takes? 10, 15 minutes?
Yeah.
So this person, your friend, who shall remain nameless, does he have like a Scorpion or one of these like high-speed boats?
Yes, it was a former America's Cup boat.
And he
Like
just
Chase
zip,
Post.
zip, zips.
Zips.
Zip, zip, zip. That's
Zips.
what I want. Now
Yeah.
imagine if that could fit 8 people and it could zip, zip, zip.
Yeah, I'd want it to be more efficient.
The gases.
Yeah, just the consumption of.
Why don't they have electric motors on these with batteries?
We need to be getting there. Yeah,
Do they exist? Do electric boats exist?
there are nothing high speed that I've seen, but yeah.
All right, paging Elon Musk.
Yeah.
Let's do a quick review here. Dropbox we talked about. You were in cruise automation, which is the largest exit in the history of AngelList. $1 billion outcome. I think
Yeah.
they invested when it was $100 million. So that was a 10x. That's kind of nice.
Yeah.
When did you get involved in Cruise, which was bought by
GM.
GM?
And we just got our final release of funds.
Yum skis.
Yeah.
Oh, it hit the 1
The
year?
escrows.
Yeah. Now, what is the escrow about? Explain that to people who are new to angel investing. What happens when a deal closes like that? You get how much money, and then how much is held in escrow? Why?
Usually about 15% of the funds that are returned to investors are held in escrow, and that's in case any kind of legal debates come up that funds need to be applied to. You lied about something, a trademark gets sued, etc.
Have you ever had that happen?
I have not, but I've been nervous about it every time.
The 15%? You sweat the 15?
Sorry, as a founder, I
As
worry
a
about
founder,
it
yes,
because
that becomes significant.
well, not just for your money, but it's also like this is other people's money, and like I want to make sure everything's in line. And there's a lot of weird stuff that happens in a company that
That's true.
can lead to legal stuff. So, I do
Yeah,
worry
look
about
at Facebook, look at Snapchat. They all had like the missing founder who comes up and shows up in year 2.
exactly.
I was a founder. It's like,
Exactly.
where are you? Because I don't see any of your name's not on any of this paperwork.
So if we talk about Cruise,
Yeah,
you know,
tell me about
I
that.
met Kyle when he was recruited onto the Justin.tv team. So we all lived in the same building in North Beach in San Francisco, and this zany, smart electrical engineering kid from MIT came out and was like, "Yeah, I'm going to build the Justin.tv headset." And incredibly smart, technically talented guy. I mean, really, really smart. And so when he was starting, you know, they built that company. Then he was CTO of Twitch, which sold for $1 billion as well. He went out and started this new company. And I said, if there's anybody on this planet that's made to go and build this company, it's Kyle.
So it's just another relationship
Yeah. And he came to me
of
for the first
Matt's
round.
that
But,
worked out.
But
But
I did not invest in the first round because
what was that, a $20 million round, $10 million?
10.
Oh,
because
100x.
because I did not like the first business.
Which was?
An adaptation, like a retrofit to an Audi. So you had
I remember that, yeah.
so you had to have this Audi, and I went to like all the demos, and I was supportive of them, even not being an investor. Introduced them to their first VP of engineering, but I just did not like that business. And then whenever I was hanging out with them, and they were talking about, hey, we're going to switch, we're going to be the Uber of autonomous. I was like, ding,
Yeah.
how do I get in?
Yeah.
And they're like, yeah, we just did this round with Spark and stuff. Like we can get you in on that. So
Zip. Yeah,
so I got in there, and so
Spark Capital out of Boston. It's interesting because it does seem to me to be another leak in your angel investing game, which I had as well, which was we both agree that you're investing in people. Yet the people who left you, you had an anger or resentment that they left your company, so you didn't invest in Dropcam.
Yeah.
And then here, you believe in this person, but you yourself tried to figure out if you personally like the Audi thing, and you denied your number one rule, which is my number one rule, which is people, people, people.
Yeah.
Have you fixed that leak in your game 60 investments in?
Yeah. I mean, that was one of the big ones that I learned it on.
Yeah. See, I learned that too when I didn't do Twitter or Zynga, because I was good friends with Evan Williams and good friends with Mark Pincus. And I was just like, I don't get Twitter. Like, it's a blog post without the post. You just have the title. This is so stupid. It's going to be like a cacophony of morons.
Twitter and the iPhone are my favorite inventions of my professional career. Like that happened while I was building stuff.
Why? Why do you like Twitter so much? I mean, the iPhone's obvious. It's a supercomputer in your pocket.
Yeah.
But why is Twitter so appealing?
Because it is a social network about ideas, not about people. It's not. I struggle spending time on Facebook. Just the
Loathsome.
the bragging or whatever that is, or like Instagram, just people taking pictures of cool
FOMO.
places.
Yeah.
The FOMO thing. Whereas Twitter,
But you have a pretty dope life, I will say. You could put a lot of surfing pictures and cool stuff.
I feel very happy with how I get to live, but I don't post most of that stuff.
Yeah.
And what I like spending time on Twitter doing is talking about ideas, about how
Yes.
the world's going to change, about how new companies are building great
It
things.
is
and how we're gonna-
intellectual, yeah.
Yeah, it's honestly the way that it's like ideas start there, and then I move into the books from there. And so much good information is still trapped in books.
I know.
Like Angel the book.
There you go. Thank you for the plug.
That you just can't find on a social network, or you can't find on...
Here's the thing. Every smart person I meet, almost universally, is addicted to Twitter and Audible and podcast and books.
Well, thank you for the plug.
Yeah. I mean,
Yeah.
It's true, though. It's like if you're smart and you value discourse and ideas, you can only go deep in a book. And if you want to reach intelligent people and have these debates online, there is something magical about a Twitter debate where all of a sudden you see somebody who's the biggest expert in the field.
And they write back.
I was talking about Pakistan's selling nukes to North Korea and Iran. And literally, the doctor accused Dr. Nuke from Pakistan is on Twitter, and somebody CC'd him, and then he said to me, don't believe what you read in the New York Times about me selling nuclear secrets to North Korea. And I'm like, is this really happening? Like, all of a sudden, I'm Mike Wallace, and I'm got the Dr. Nuke from Pakistan debating with me if he actually sold them.
Yeah.
Mind-blowing.
I know. I love it. I really do.
What books do you like? What books have you read recently? How do you like to read? You ebook? You physical book? You Audible? What do you do?
I'm physical books.
You like the physical?
And it used to be just Amazon it. It's easy.
Yeah.
But recently, my wife's a public school teacher, not public, but a school teacher in the city. She's super into the library, and I've gotten super into the library.
You have kids?
No, not yet. But
we have kids, you really get into the library.
We have a library branch 2 blocks from my house. Sometimes I just browse through there and find stuff. And then what you can do is request them to send stuff up from the main library, and it shows up in 2 days. And you're like, wait, that's like Amazon for free.
It's almost Prime. Yeah.
It's almost Prime.
It's
almost Prime.
I am so addicted to Audible books. They happen to be a sponsor of a lot of the stuff I do, but I am listening right now to Why Buddhism is True by Robert Wright. And it's like, Robert Wright's just like real intellectual guy, but I heard him on Sam Harris's podcast, and he just goes into the science of how Buddhism and mindfulness just aligns with the evolution of our brains and our emotions and our systems, basically. Yeah. It's mind-blowing.
The book that I was reading this week is the biography of Jane Jacobs, the great urban thinker.
Yeah.
And it's called Eyes on the Street.
Eyes on the Street.
And it's been...
What was his claim to fame?
Her.
What was her claim to fame?
She was the first person that looked at urban planning and kind of said we should look at how people socially use space, not just how the space looks from 10,000 feet, on kind of a physical model.
And was there some insight she had, like that we should do this type of structure?
Oh, so she basically had 4 principles. I'll have to try to remember them, but one is that we should mix uses. So this idea of like people live here but then work over there is broken.
Of course. When did she get that? She was ahead of the curve.
1962 is when she wrote the book.
Wow.
Yeah. She's one of my heroes. So
why is that?
Because she did this in 1962 as a woman. She was not trained in urban planning. She was a writer. She's an incredible writer. She was a mother of 3. And she just did this out of a personal passion and fought very powerful forces.
Male forces.
All male forces. As like a nerdy house mom that like rode her bike everywhere and said, no, you guys are doing this wrong. And she changed the world. And she's truly just a hero and a really important person in kind of all modern thinking about cities. And I think cities are mankind's greatest invention. Like we all invest in inventions. Like the best thing that humans ever did was create cities.
Yeah,
that's where all the other ideas come from.
The collisions that occur in a city, and the spontaneity, as we talked about earlier, why it's so important to be there.
And the specialization that's allowed because, hey, your food can get delivered, so you don't have to spend time cooking. You can spend time doing what you're great at.
Yeah.
All that comes from cities. So mixed uses is really important. And this is good. Like this idea of like everybody drives to a parking lot in a, suburban office park.
Then a mall.
And then they leave, and then that parking lot is sitting there empty all evening where...
It makes no sense.
It could be used to store people's cars that live there, too.
Well, now Walmart is like, I was reading the New York Times this week, and Walmart has a basic rule. You can sleep in Walmart's parking lot. Just, there's a certain decorum and some expectations that you're not going to dump stuff in the parking lot.
Big part of the van life movement is the Walmart parking lots.
I know. I think this living in mobile homes, like Tony Hsieh's got a setup. I don't know if you've seen it in downtown where he's Tony Hsieh's literally living in an Airstream. It's a billionaire living in an Airstream, and I've stayed there 3 or 4 times. When I go to Vegas now, I can stay anywhere I want, and I got the hookup.
Yeah,
because I'm doing some gambling, and I can get like a really good deal or a free room, whatever comped, and I stay with Tony because I go there and he has 30 Airstream tiny home set up, and the collisions. I come out to the campfire.
Yeah.
And I meet interesting people there. So I met this kid, and he's like, "Oh," I'm like, "What do you do?" He's like, "Well, I create this thing called Spin. It's like the ping pong thing." So the founder of Spin is staying at Tony's thing. So I had a whole conversation with him about his next idea.
Cool.
Right?
Yeah.
Interesting.
Yeah.
All right. Weebly. You got into Weebly? This is a huge company now.
It is a big company.
Sequoia's an investor.
Yeah.
They have a huge headquarters here in the city.
Man, they probably have...
They build web pages.
Yeah, they probably...
Squarespace, WordPress-ish.
Yeah.
Website building.
Yep. And now e-commerce stores as well, going after Spotify,
right.
Shopify market.
Shopify, yeah.
They have probably 300 employees here and maybe another 200 or so in
When did
Arizona.
you invest in them, and how did you get past the, doesn't this exist in the world already?
So to be honest, I'm an advisor to that company, so I have advisory shares. And
Great.
I was introduced to them because we were both Penn State founders, and this was early YC days. They were in the third. I was in the second batch. They were in the third. And Paul Graham who's also from Pennsylvania, was like, "Hey, these guys are from Penn State. You should welcome into the city." So I said, "Hey, come move to our building," and basically introduced them to Steve Anderson and all their first investors.
Amazing.
And
so you got yourself a little taste.
Got a little taste.
Yeah. See, I write in the book about advisor shares or how to be a broke angel.
Yes.
And when you have advisor shares, I don't know about you, but I'm like an advisor to Wealth Fund because they weren't raising money. And I tried to invest, and they're like, "We'll just give you advisor shares." I feel so much obligation to help them.
Yeah.
Because I have the advisor shares and I didn't have a cost basis for them.
Yep.
Did you feel the same thing when you have the advisor shares that you really want to perform?
That's definitely the case. I feel like this is a job, and I'll do, these kind of roles that are light advisory, and then I also do a thing with some companies that are deep advisory.
Explain the difference.
So a light advisory is, generally what you're looking at is a quarter, half a point. It's like, hey, call on me when you need me.
So it's on demand.
It's on demand.
Vested over 2 years, 3 years.
Yes, 2 years. The deep advisory is usually with a solo founder, doesn't have a co-founder yet, or a founding team that's new to the game and that wants you to, spend time looking at the market with them, like maybe interviewing their first employees, like doing deep work with the company. And that's something where I try to go to 1.5%, 2%. Well, I try to target a 1.5 after Series A. So it might be
2% pre.
Something
you're going to
like
get diluted 25%. So it makes sense. You want to get 2 points vested monthly over 2 years.
Exactly.
Perfect.
And
you have an agreement that you have them sign? Will you sign?
No, we kind of just do it by email and say, hey, it's like for 6 months. It's like I also, we'll talk like once a week, and then it will kind of trail off.
Great. But you outline the scope of work to be sure.
We do. And
have you ever gotten screwed in this? I got screwed one time with my advisor shares.
I have not. I have a company going through a deal right now, and like I said, I helped create it, so hopefully it shouldn't be any issues. But I actually learned this model in talking to Bill Trenchard and Sean Ellis.
Huh.
Yeah.
Bill from First Round?
First Round, yeah. Great guy.
I like this idea of the deep advisorship because I do get people all the time who just I'll give you a point if you just introduce me. I'm like, I don't want to do that at this point in my career because our names, Matt, mean something.
Yeah.
And if you just take the free equity for somebody you don't know deeply, this is bad for us.
You have to be super selective about this.
Yeah.
And also, I will only have 3 active at a time.
Very nice.
Yep.
Is there a time when you've had to cut off a founder because you didn't feel you were morally, ethically, or just aligned with them, where you just said, God, I just take me off the cap table, buy my shares out, or I don't want to be in business with you because I don't agree with this. We're at an impasse here, and I made a mistake investing, and you made a mistake, or you made a mistake taking my money. Have you ever had to cut off a relationship and just say, this isn't working out, and how do you do it, if so?
I don't think I have.
Yeah.
I don't think I've done that. So
have you wanted to do that? Have you had situations where you're like, this is just untenable?
I really don't think I have. I think I do enough of trying to get to know the people. I do reference calls on people that I don't know.
How does that go?
I mean,
you ask them for the references, or you go find them?
No, I always go find them. Yeah.
There's a word for that. There's a word for it. It's like independent, either
Yeah.
cold or the word for it. I can't remember
there's
the
a
word for it.
but I used it
of
in
references.
I used it in companies all the time. It's just like a real quick thing. Often I try to get 10 minutes on the phone with somebody who's worked with this person before.
Call. What are they like?
And that really filters down somebody who might have had a shiny veneer, but like is dangerous underneath. And I think that's helped me.
I've only had it happen twice.
Yeah. You've also done more deals than me. So
yeah, I and both times I was just like, one time was somebody who came to the incubator and my own team was like, we don't know about this person. And I was like, oh, let's take a risk. Sometimes talented people can have a little bit of an edge.
yes, you don't want to.
So you don't want to disqualify somebody because they're a little cantankerous or have sharp elbows.
Yeah.
Sometimes that's a strength, isn't it?
Yes. The spectrum can come out and, a lot of great founders are on it.
Yeah, it is interesting, isn't it, the spectrum?
Mm-hmm.
And when we say spectrum, Asperger's and/or just being an a-hole, right? Like there's two different things. There are people who have a lack of social grace or ability to interact on a human basis like you and I specialize in.
Right.
But then you have people who are just high extroverts who are a-holes.
Yeah,
or
no,
pricks.
those you don't ever fucking touch.
Right.
The other people can seem like, oh, they don't really care about people. You're like, you don't understand. They're not thinking about people right now.
Right.
They're thinking about efficiency of time,
Right.
and
it's not intentional.
it's not intentional.
Which is really the thing. There are people who intentionally hurt or screw other people
Yeah.
and who are mean to other people with intent. And then you have people who are just, they might literally have Asperger's and not be able to look somebody in the eye and know that they hurt their feelings.
I don't think the assholes get very far in this town.
No.
It's not, you run into it in kind of corporate America ladder. You get a lot of it in politics.
Why do you think that is? Why does it not last here? Because I agree with you. It's very rare. And I've actually seen people who have a tendency towards that, who kind of self-correct their own behavior and be like, wow, this doesn't work here.
I think it's because there's too many opportunities here that it's like life's too short. There's too many amazing companies to spend time with. I'm not going to spend time with an asshole. Whereas if you're like working at a defense contractor in DC, there's like 3 of them, and so
You just have to deal with them.
I think so.
Yeah, if you're in publishing, there's this many publishers, or if you're in TV, there's this many people.
Yeah.
And agents.
And additionally here, the person that like was the nobody at the party last year is now like
it's Mark Zuckerberg.
Exactly.
Or Travis.
Exactly.
You think about it, like Travis had 2, or Jamie Siminoff. Like people were like, oh, Jamie Siminoff, the guy with the battery packs, or the unsubscribe me that everybody got their money back at 1X,
Yeah.
15.5. You and I are both in this great company. What do you love about David's company?
Well, I love David. Right.
He's great, huh?
He is an amazing person.
Special founder.
Yes. And again, this is the thing that you and I both look for. He's built things in the past, and some of them have been weird, like building a kite surfing tour business in South America. Like that's not normal.
No.
That's not
It's unique.
It's unique. I actually met him on the beach kite surfing.
I got up for the first time.
Nice.
I got up for 7 seconds at
Recently?
Necker.
Oh.
Yeah, this year.
Okay, cool.
And I have to say, it was one of the peak experiences of my life.
Nice.
Like literally that feeling when you start bouncing along the water.
Yeah.
I'm getting tingles just thinking about it. Like it was, wow.
So I was on the water there when Obama was learning last year.
Oh my goodness.
Yeah. And like threw him like a,
mahalo.
when he was going by the boat. Yeah, it was pretty cool. But
He got up too.
He did.
Yeah.
He's a good athlete.
It is such a peak experience. It's something about you have to control the kite and have complete mastery of that, and then also master this board.
Yeah.
And then you have to put them both together. And this is where when it clicks and you finally put the two together, it's unlike snowboarding where you're just trying to get up on the board and not fall. Here you're trying to get up on the board, but you have to master that kite.
Yeah. And then you add waves into it.
Yeah, I didn't get to that point.
And this whole time you're not using an engine. It's all natural. You're harnessing the natural energy, which I think is so beautiful.
It is. It's so peak experience. You can do it in the Bay, can't you? I hear that Alameda is the place to do it if you're learning.
It's a place to learn, yeah. I do it all over the Bay Area and the world.
How long did it take you to get consistently good at it?
Oh, man. probably 6 years.
Wow.
Yeah. And still now it's like, oh, here's all the
Because
ways that I suck.
I did 2 sets of it at Necker for like a day and a half each time, and both times the wind dies.
Yeah.
So I'm like, I'm on day 3.5, and a day 3.5, and I got up.
Yeah.
But I haven't gotten like 5 days in a row.
That's what you need.
Where do I do that? What's the best place for me to do that?
Turks and Caicos is really good for that. The Outer Banks is a really good place to do that. And the Baja Peninsula, La Ventana, Los Barriles, that kind of the Sea of Cortez side is really good. But back to David, I met him kiting, and one of the things that I like about something like kiting or doing these types of things with entrepreneurs, surfing, snowboarding, biking, is getting people out of the mindset of just talking about business.
Yeah.
And then seeing how they talk about other things. And you can see and find people's passions and their determination. Another great founder, Shelby Clark, I met him kite surfing.
What's his company?
He started Relay Rides, now called Turo.
Yeah, Relay Rides.
Very big business.
Yeah. What's it called now?
Turo.
Explain to me what they do.
Turo is Hertz Rent-A-Car, but where the cars are owned by individuals. So you just rent out your car.
Like Get Around, I guess, there's a couple of them in that category.
Yeah. Now, they've positioned themselves more as like longer duration in rentals, and the person like comes and picks you up. So I use it. I really like it when I have to get a car. But he's just like an incredibly determined guy that was just going for it on the beach in Maui, and I was just like, wow, like what an impressive person.
Resilience.
Yeah, and so you see that, and that's what I saw with David, and then this mission of what they're doing, and when I used it at my company of trying to change the performance review, so it's not this once a year thing, but like every week you're getting this input from your employees, from your team about what they're struggling with, what they want to accomplish, how they feel like they're going on their career trajectory, that one-on-one type of stuff, and giving them a new channel to do it. Not everybody communicates the best in person.
That's the key. I think that's the key.
When they can sit down and write it.
Yeah. And
as a manager, it makes your one-on-ones can be shorter and more effective.
Basically, you ask people 3 or 4 questions a week.
Yep.
Takes them 15 minutes to write it, and it takes the manager 5 minutes to review it. 15, 5.
Yeah.
15 to write, 5 to review. But I found it was incredible when I had a 100-person company going, when Mahalo, before it was Inside, had 100 people. I'd literally had somebody at one point write, I hate being here every day. I want to do documentary films. I don't know why I'm here. Like literally they wrote that in a box to their manager.
Yeah.
And we talked to them next week. We're like, can we help you find that job or do it? Like, and so, I just don't want to be in an office every day. I just don't like this.
Yeah.
And we're like, great. Want to be a freelancer? And they wound up becoming a freelance video editor for us. And they were one of those people who doesn't want to get up in the morning and commute.
Yeah.
And we wound up having a more productive relationship with the same employee because they would never say that face to face.
I think you'll find the most productive, highly functioning companies will be using something like 15.5 if they're not already. It's just a much better way, especially in a world where people are changing jobs every couple years and people are looking to grow outside of and learn outside of school in a constantly learning type of modern economy. This is just, it's going to be par for the course. So.
And you know what? To do a call back to what you said earlier about focusing on the problem people at your company versus the big high achievers, something like 15.5 reminds a manager of where their high performers are at. And I believe the world is moving to high performance, smaller teams doing more.
Yes.
And if you have a small team and they're doing well, knowing where they're at and knowing how to optimize a high performer, a 10% optimization of a high performer is a much bigger tweak than a 50%, evolution of a low performer who's an Eeyore in your company just complains.
Yeah. I mean, another one that popped out from a high performer in my experience was, hey, I feel like we haven't had kind of a team kind of bonding social event for a while. Like I'd love to like organize a group bike ride. And it's just like,
do it.
Yeah.
You're like, I'm buying the beers. I'm buying the quesadilla. Let's go.
Exactly. So
it reminds you. Hey, also on here, you have Teachable. I don't even know what this company is. Tell me what Teachable is. I love the brand.
Yeah. So
it started out
you missed it. It started out as Fedora.
Okay.
I've actually come into this company 3 or 4 times now through like 3 or 4 different funding mechanisms. So I did an angel list with them.
Great.
I have
You have a syndicate, yeah?
I have advisory shares with them. Okay. And then I came in through a scout program that I'm part of. And the founder, it's His name's Ankur Nagpal, and he is one of those people you meet and you're like, holy shit, this guy is going to do stuff, and he already has done stuff. He built a
What does Teachable do?
Teachable allows anybody to go create an online course.
Okay. So there's some companies out there like that. What makes this one unique?
You completely own your own brand and your customer base. So unlike a Udemy where you're selling courses and Udemy tries to market them other stuff, this one's like you don't even know as a user that you're on Teachable.
I love this because you know what? I have Angel University now and Founder University. I've been looking for a platform to platformize it.
You should use them, and some very big brands use them, and you wouldn't know it. And
so it's like Coursera or Udemy, but white label.
White label.
So they're your MailChimp or whatever, your SendGrid.
And I learned one of my favorite things to look for in a business are businesses that allow entrepreneurs to make more money, because entrepreneurs, like micro entrepreneurs, to make more money, because entrepreneurs are the most motivated people on the planet. So I learned this at Weebly. Some of their best users and customers are people running businesses. They're the ones that are willing to
Do they do the YC Startup School? The online course that
I introduced them to YC, but YC ended up rolling their own, I'm pretty sure. Yeah.
That did okay, right? That did okay. So you were in the second class of YC?
Yeah.
Was it still in Boston then? Or
yes,
did it
Cambridge.
And then it moved in the third class or the fourth class? Third
right
class.
after us. Yep.
That was when YC was only 6, 7, 8 companies?
Yes.
What was that like going to Paul Graham's house and him making stew, right? There was the famous stories he'd make some luck stew. Is that true or is that just law?
No, it's very true.
Was this stuff good or was it terrible?
No, it was good. I mean, listen, dude, we didn't have much money, right? So back then they gave us $10,000.
Right. $6,000 per founder, $5,000, whatever.
Right. I mean,
ramen food.
We were renting a desk to Drew to make some extra money for our apartment. We were eating Hot Pockets and Eddie's ice cream. And I was flying down to DC to do some consulting to make some more money because we were trying to stretch this cash. So whatever they fed us, we were super stoked about. Tuesday dinners was also about just getting fed. But I mean, it was amazing. And as soon as I landed in Boston and met these people, I told my mom, I dropped out of grad school to do this. My dad, the engineer, was not that happy about it. My mom...
3 years in, you dropped out.
Yeah. My mom...
You ever think about going back for that one year?
No.
Okay, what did mom say?
My mom said, I think it's a really good idea.
To drop out?
Yes, and I think it's going to be really good. And I remember calling her and telling her, Mom, I feel like I'm in like the first class of the new Harvard Business School. That's what I said to her in 2006. I think it's totally proven to be that.
It has.
And the people that I've met in it, I also said to her, I don't think I've ever met a group of people that I feel are more aligned with me in terms of their interests and ambitions. I was in the honors college in undergrad. I went to a good PhD program with smart people from all around the world, but like never had it just coalesced down to a group of people that I felt like, hey, they like know how to have fun and want to have fun, but are very serious about their business and have been, building stuff their whole lives. And so I met, these are some of my best friends now. Yeah. And
it's your network. You're part of that YC mafia.
It is. And I said, I don't see Paul or get to talk to him very much. He's very, he's busy and, but
does he even live here anymore? Does he live in Europe? Somebody tell me
they're in Europe a lot.
Yeah, they're in Europe.
As one should be. I spend summers there too.
Yeah.
It's so good.
Paul basically, he worked really hard building YC. He killed himself.
He worked really hard, but he's probably one of the most important people in my life in terms of changing the trajectory of my life. I always wanted to start a company. That's why I went to do my PhD. I thought I had to go become this expert I was doing control systems, robotics. I thought it was going to be another 10 years before I could start a company. And Paul said to us, you can start a company right now. And that changed my life. And thank you, Paul, if you're listening. Thank you so much.
This is one of the things that I love about angel investing as well is a small act, writing a 10K check in his case, or your case, of being an advisor or putting 25K into something, you could literally change the course of a person's life and the course of society and history. Uber has changed the course of history. Dropbox has. Teachable might, right?
Yep.
And this is even if I was explaining to somebody, my friend Lisa Randall, who's a physicist who teaches at Harvard, was at the house this week, and we're talking, and she said, why did you write the book? And I said, I believe that this is a profession that people could have. And even if people got paid a straight salary to do what we do, let's just say it was a government job that paid $100,000 a year.
Yeah.
People would love this job of just evaluating people and ideas and giving them resources to go change the world. For the thrill and the excitement of hearing the pitches and helping, that alone provides enough value, let alone the fact that if you hit a Dropbox, it could be life-changing.
Yeah. I kind of don't think it will ever be done well as a government job, though.
No, of course not. But I do think actually when you think about it, some governments now are looking and saying, we have to entrepreneur our way out of whatever abyss our economy is in. And for governments to be, if a government gave Y Combinator $1 billion and said, for the next 10 years, we'll give you $100 million a year to invest in 200 companies, 500,000 each, just to get Germany, China, India, Pakistan, Sri Lanka, pick the country, ahead of everybody else. And just take the model there and be freewheeling and take anybody from any country. If Vancouver did that, Vancouver would be second only to Bay Area. And what's $1 billion to a modern government? Right. Nothing.
Well, yeah, and there have been big pushes around this in Paris. They've done
what? Paris?
I forget the total funding sources, but like Station F and what they're doing there, I think it's they've been making a very big push,
and they have had some good success. And companies there. Yeah.
Chile
did that, yeah.
At a kind of very high government level. So yeah, what I was going to say is it's a little hard to just pick a random person who's like looking for a job to go do this as a job.
You have to have the.
I mean, like the only reason I get into deals is because people are like, "Oh, you've done this before. You've built a company before. Mm-hmm. You can tell me the things the landmines I'm going to step on before I step on them."
It is a nice thing that's occurred in the funding business when I came in, and I'm, I guess, maybe 10 years ahead of you. You're 35 or something, and I'm 47. So when you were in college, I was actually a reporter in the dot-com boom, and you were in college or high school.
Trading those stocks.
He traded those stocks, the Globe.com or whatever, CD Now. And what was interesting is, I think, when I started, all the investors were the fraternity brothers of other Harvard, Stanford, whatever, MBAs. Mm-hmm. It was just literally like if you had an MBA, you could come out of MBA, become an associate, you just go up this, and then eventually become a principal and whatever, then be a partner. And there was like now almost every company is like, are you a journalist who covered the space and like you're MG Siegler or O'Malley and you're a top of the stack journalist with a really brilliant mind, like Kara Swisher, they've been trying to get to be a VC for a while now, I understand, and you have a great network. Or did you operate a company and do growth at that company like Josh at Greylock or whoever? It's actually a really nice turn of events that the operators are now the investors.
Well, it's because founders like me and others realized that the investors that were the most helpful, if I go think back, he wasn't on my board, but who was, other than Paul, who was the investor that was most helpful? Josh Koppelman.
Yeah.
It's because he's built great companies. He's
first round, yeah.
Yeah. I mean,
he built half.com, I believe.
Yeah, and he took a company public like right out of undergrad too.
Yeah. I mean, he knows where the bodies are buried.
And first institutional investor in Uber too, right?
I introduced them to him.
Yeah.
At the Open Angel Forum.
Yeah.
They were there. It's pretty crazy.
Yeah.
Matt, we could talk for hours. And in fact, we've talked for an hour and a half.
Oh, wow.
We're not supposed to go this long on Angel the podcast, but we have. Matt, this has been great. Thank you for being candid. And it's just wonderful to have met you when you were doing Xobni. And then we both share this passion for investing. And we have to do more deals together. Do you take cold pitches from people? Do people email you cold pitches, or is it all trusted referrals?
I see some cold pitches. Yeah.
Any a cold pitch ever result in you advising Y Combinator to accept somebody or you investing? Can you remember that, a cold pitch?
I can't remember that happening necessarily, but I bet it has. But I won't just see a cold pitch and then refer to YC. Like I will meet and dig into the company and the people first. So
it's certainly possible for a cold pitch to get a meeting with you.
If you're asking for people listening, they can hit me up on Twitter, and I'd love to meet more founders.
What's your kill zone? What's the spot where you love to engage a company in terms of the product life? Yeah, is it pre-product market? Is it right when they have the MVP but haven't launched it? Right after they launched it? Is there like a window? A Goldilocks zone?
I mean, I usually do best when it's people been hacking on an idea and like have something they can show, and it might not even be what they end up launching. And they usually have a co-founder.
Got it. So co-founders, good signal. Why is that an important signal? A technical co-founder.
Well, for technical co-founder, especially because they're going to keep building stuff even when they don't have money.
This is Paul Graham's signature innovation, I believe.
Yeah, it is.
He had no money, So out of necessity, he only invested, this is what I understand, you can correct me if I'm wrong, but he only invested in people who could build because he knew he didn't have the money to continue funding them, and he knew at some point they would run out of money, so the business would still be making forward progress when they ran out of money.
Somebody can go work on Reddit for 4 hours every evening after their day job. That could have happened with that company.
Yep.
I don't know his mindset in thinking about it, but it's something that I think about, and
I do too now.
I really like when founders are building, even whenever they don't have money. So I look for that, and I look for a co-founder as well, because then you've kind of looked somebody else in the eye and said, "I'm doing this, we're doing this," and it's really hard to give up whenever somebody else is counting on you to go and make a success. So it's the what is
Teamwork.
it? Cortez burn the ships.
Yeah, we're gonna make this work.
Yes,
because we're not going back.
Yeah.
All right. On that note, Matt Brezina, he is Brezina on the Twitter, Brezina. You can join his AngelList syndicate. I don't know if he's allowed to tell you that, but I know I can. Go to AngelList and look for him. Is it named or is it just Matt Brezina?
Yeah, look for my name.
Just look for your name. Do a search for Brezina on AngelList. And one of the things that's great about joining these syndicates, if you're an accredited investor, is you can opt out of deals at no cost. You can just look at your deal memo and learn. So if you want to learn what's going on and what great angel investors are thinking about, you can go to Seed Invest, Funders Club, AngelList. You can sign up for all these things and just watch the deal flow go by, and almost like you're not betting on anything, but you're just learning about how the lines are being set.
It's more interesting than watching the Bitcoin price.
What's your take on
Oh, no, we're not starting that.
Unbelievable. Somebody just reminded me of a tweet. I have 2 Bitcoins sitting in a wallet that I don't have. And they're like, by the way, what are you doing with this $20,000? And I'm like, kill yourself. Like literally, okay, I'm not supposed to say that on the show anymore, but I was literally like, my God, please don't remind me there's 2 Bitcoins that somebody gave me when they were literally $1 each.
I got mine on Hacker News. We were like having a conversation about it in like 2014.
That's when somebody sent me 2.
Yeah.
And do you have the wallet and the key?
I can't find the key.
That's
passphrase, same thing.
How many? 2?
1, yeah.
So you get 10 grand sitting there.
I know.
It's infuriating.
Yeah, it is.
This is the stupidest thing ever.
I know.
There's somebody who lost like, I think, 2,000 or 3,000 Bitcoins. And then somebody paid for a pizza. Did you read that one? They spent 600 coins on a pizza or something like that. That's now worth $6 million.
Anyway, I'm not in it, so.
I'm not in it either. I can't get my head around these ICOs that are white papers, but no product's been built. Everything we talked about was trying to suss if the person is a great builder and passionate. And these white papers are just 10-page documents that they say nothing.
This is my biggest struggle is the few people that I found that are like doing ICOs and they kind of fit a profile of like not the builders and not the authentic people that I normally meet.
Yeah.
And all the good people I know aren't doing it. So
it makes no sense to me.
Yeah.
I think it's going to be the second wave. Remember the internet companies that first came along? There were this whole cohort. And who made it out? Amazon. Even Netscape didn't really make it out. I mean, they wound up being Mozilla. It still exists to a certain extent. But Amazon was the one company that just still is worth something. Somewhere in this group in the first 5 years of ICOs will be the Amazon.
Yeah.
But if you invested Amazon in any one of the first 5 years, you're golden.
Yeah.
You're fine.
Yeah.
You're completely happy. So that's what I'm doing. I'm looking at it. I'm watching all these dipshits claim that they're going to displace Facebook or Uber and Lyft or Airbnb because coins are going to go back and forth for rides. I don't know how the coin goes back and forth for rides. I don't know if the car payment can be paid for with a coin and what the point of a token is for a Lyft line or a Uber pool. I don't get it. It seems like they're just taking all the companies we invest in and they're just putting the word ICO and token in front of them.
It's a new way of fundraising, yeah.
It's a disaster.
It is.
It's literally...
It will be a disaster.
I wonder, I was literally just thinking, like, what are the existential risks for the stock market right now? Okay, Trump starting a war, which could be good.
Them passing their tax reform.
Perhaps the tax reform could create...
Either way, it'll be bad. If it doesn't pass, the market will go down because it's bought into it. If it does pass, it's actually not good for our economy. So
people are going to get all these tax breaks, and I don't know that that's going to start anything. Like rich people getting tax breaks, what does it do for America?
It's companies which will pass down to rich people in dividends and stuff, which is good. But then it's they
don't spend it,
and also the biggest some of the biggest parts of our economy are in these states that are now going to have these huge tax hits from it. Our real estate market here, New York, et cetera. So
it's crazy.
Either way, I think it's downside.
So then could the ICO market, which I understand is mostly overseas money, I don't know if that's true or not.
I don't know.
Because nobody really knows their buyer in this case. But if Bitcoin runs up to $50,000, and if institutional funds are now chasing this with FOMA, and they start putting money in at this moment, because they think 10,000 is going to equal a $1 million Bitcoin, and they want to get 100x, right? That's what they're thinking. We missed out on the 100x from $100 to 10,000. We're going to get the 10,000 to $1 million run up. Okay, so it runs up to $200,000 a coin, and then there's a hacking event or a run on a bank, and everybody tries to sell their coins at once. And somebody put in money from a CalPERS or a retirement,
right,
or an endowment or something.
If it's big enough, I think is it like 300 billion right now, like total?
Yeah. So
we just have to watch the total dollar value and see if it's when it gets to a point that it's large enough to disrupt the entire economy. Kind of like the housing market, which is like trillions.
Yeah.
That one can really do it, but
and whose money?
300 billion is pretty big already. That's true. Yeah.
I don't know if this is money from China or, Venezuela, and it's, Putin's money or Saudi Arabia's money that's pumping this up, and people are washing money through it.
Yeah.
That's the other thing that concerns me is whose money who are you making money for here? And if, I don't know, something like 80% of the coins are owned by 5% of the wallets or some really weird, God bless you, number. And if that's the case, wouldn't manipulation be super easy to do when you had that consolidation of the tokens in a smaller number?
Right, making the market.
They're making the market.
Yeah.
And nobody knows. And the Chinese government or Chinese hackers or the majority of the miners, like, that seems to me to be dangerous. All right, this week, in who the hell knows? I mean, it's one of the things when you're an angel investor where it's like, what's your crypto strategy? And I'm like, I don't know.
Yeah.
I don't know what my strategy is.
Yeah, same answer for me.
No, who knows?
Yeah.
I do like the idea of a coin for my next fund. If I was going to do a next fund, if I had on the front, if there was a coin where LPs could trade their interest between each other and
So it
it
becomes
was
more
approved,
liquid, yeah.
that could kind of be, I could see that being very interesting for
there's
people
financial
who need to move, interest, they get divorced or they have a life event, they just want to get out of this fund and into another, or your fund hits Dropbox and everybody says, oh, I want a Dropbox exposure. This fund is 90% Dropbox. Is a proxy for buying Dropbox, or in my case, Uber and Thumbtack and DataStax. Okay. Matt Brezina is at Brezina on the Twitter. He is an exceptional angel investor and somebody you would be lucky to have on your cap table if you're a founder. And thank you so much for sharing your lessons.
Thank you for having me.
We'll see you all next time. Bye-bye.